Hello and welcome to this July 28th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Bowling, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're looking at Intercontinental Exchange, ticker symbol ICE. This is nearly an $8 billion financial company. The primary reason for looking at the financials was, if you saw the action on Tuesday, you know that the Dow Jones U.S. Financial Index got up very close to a breakout around the 270 level, right around 270, 271, went right up into that territory and failed and reversed pretty hard. The XLF, which is an ETF that tracks the financial sector, gapped up this morning, printed a black candle off of a nice uptrend. So it looks like this is an area where we could struggle from here. Now, if we make the breakout, then you can totally disregard everything I've said so far. And the financials, if they do break out, are likely to outperform, and this potential short candidate, ICE, is probably not going to do very well. But we can't sit back and assume that we're going to make a breakout above a key intermediate term downtrend, and that's what we've been in since April, and we're getting very close to a key resistance level across the major indices. So as a result, when we start seeing failures like we saw on Tuesday from the financial group, makes us a little bit nervous, and at least it gives us the feeling that the best risk to reward trades, or reward to risk, depending on how you look at it, but the best risk managed trades are probably going to be on the short side right here. So we haven't been looking at too many shorts the last few days, but we thought that this would be a good time to take a look. So ICE, the reason that we just don't like it is, number one, we feel like it fell out of favor back at the end of June. You can see when we broke down below this 50-day moving average, the volume picked up. The MACD crossed over the center line, took a turn for the worse. Notice the prior couple of months when we had come down to the MACD center line, we had bounced off of it, and that extended the uptrend each time. That extended the uptrend, and we continued moving higher. But with this last move down, we did not hold at the center line, and that gives us the impression that we are now in a downtrend that could extend longer. We need to see more out of this move to the upside before we'd be convinced otherwise. But on the last move to the downside, or the last two moves to the downside, you can see with these red arrows, we put in lower lows. We also put in lower MACDs. So the momentum at this point is still squarely on the bear side with ICE, and all this bounce has done back to the 20-day moving average really has set up the bears to put on more shorts, and that's what we would look for at this level. So we like it on the short side until we see a break above about 109 or 109 and a quarter, and if that were to happen, then I think you've got a chance to run up to the 50-day moving average. But prior to that, I would look for the next big move to be the downside. Price support held back in May right around this 109 level. We bounced off of it. When we came down, we went straight through it pretty hard with some pretty solid volume at the beginning of July on the breakdown below the 109 area. And notice as we've been coming back up, that's where the bears seem to take control. So the stock finished today, Tuesday, with a close at 107. It had reached as high as 108.90, so again, it was right up against this resistance and then failed. We just think that playing a short position from the current price up to about 109 makes sense. Any close above, say, 109 and a quarter, 109.50, somewhere in there, we would be careful of. But ultimately, we think that ICE could make a short-term move back down to about 101.50 and potentially even a break below that level. And if we see a break below 101.50, there's not much support until we get down to $95. So the reward to risk looks good on ICE from the short perspective, and that's the way we are viewing it at this point in time. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.